Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin with a look at the broader Australian equity market, which has recovered much of its losses since the outbreak of the war in the Middle East. Jason McIntosh from Motion Trader analyses the S&P ASX 200.
The ASX 200 had a 10% decline in 14 trading days, and then that's been followed by an 8.5% rally in just 10 days. So that's the classic V-shaped structure. And these are often event driven, and what we get, there's panic on the way down to sell, and then on the way back up there's a rush to get back in when the situation appears to go from bad to maybe less bad. It's interesting, we started to see the local market become resistant to selling last week. So the ASX 200's low was more than 2 weeks ago. It was on the 23rd of March, but the low on the S&P 500, that was a week later. That was on the 30th of March. And leading into the 30th of March, that included 3 days of heavy selling. And if you look at this chart, the local market didn't come close to retesting that low from 23 March. So we have an instance of decoupling from the US, and that's something we don't often see. So that's interesting in itself. I spoke about this last Friday in my weekly strategy session, and it was an indication that peak fear had passed. But does that mean the market's heading back to new highs? Well, I think there are two key things to note. Firstly, the rally back above the moving averages, I've got the 1500-day moving averages on this chart, the rally back above those averages, it disengages the downward momentum and it removes the vulnerability that was present when prices were below the averages. People are often worried about market crashes, and it's when prices are below declining moving averages that the crash risk really increases. We no longer have that condition. The bad stuff tends to happen below the averages, not above them. The other thing to note is the strength of the rally. So it's been a powerful move, which indicates aggressive buying. So that's how many bullish phases start.
Well, the oil supply crisis is already impacting the resources sector. Michael Gable from Fairmont Equity says the disrupted supply chains will inevitably lead to an increase in the cost of commodities. Here he analyses commodities giant Rio Tinto.
One small piece of news which not many people have spoken about in the past few days is from May China is blocking the export of sulfuric acid, and that's quite essential for mining copper, mining uranium, producing fertilisers. So there's going to be a lot of damage done, and commodity prices will go up, and basically across the board we're seeing the classic signs of a commodities bull market. So your BHPs, your Rios, they'll do really well, and I brought along a chart of Rio. Rio's basically knocking on its all-time highs despite everything that's happened, and again we have a chart that's broken out above a multi-year resistance lines. So just because Rio's rallied for a few months, I think there's still a long way to go in the rally. So again, for me, any dips in Rio is a buying opportunity.
Well, amidst the oil crisis, China has been buying more of Australia's coal and using it to their advantage, says Michael Gable. Here he looks at the implications for the share price of New Hope Coal.
Coal prices have been heading higher. The unique thing about coal is that there's been a huge amount of underinvestment, if that sort of makes sense, because no one wants to invest in new coal mines. So supply is very limited. This is New Hope Coal. I've brought this chart a few times over the past few months. We could see the breakout at the start of the year, again from a multi-year, above a multi-year resistance line. This is another one I've been happy to buy on any dips. I think that'll go to new highs. So I think in the next few months or so, you've at least got another couple of dollars on top of that share price. So it just makes sense that that countries diversify into other sources of power, and coal's quite easy to do that with, because most countries have their coal-fired power stations already. Even here in Australia, we're closing them down, but we have seen, especially in New South Wales, that slowly get reversed and extended.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.